Hey everyone, it's Tom Karadza with another Rockstar Minute. And listen, today the Bank of Canada decided not to raise interest rates, and they kind of hinted that they're not going to raise interest rates going forward. This is the destruction of the middle class in real time. We are not surprised by this, but this is something we've talked about for the last 10 years, and we think over the next 10 years we're going to see super low rates, and we're even on the watch out for negative rates, which is a little bit of an interesting story. We did a podcast on that really recently if you're interested in more information on that. But the reason this is the destruction of the middle class in real time is that low interest rates have so many side effects that are negative towards the middle class. The first thing is it makes everyone chase yield. And then when investors chase yield, that automatically favors people with assets, people with businesses and people with properties, where they can tap equity in those properties because no one's earning money from interest. So they're tapping equity and they're taking that money and reinvesting it. So if you have assets, it's favoring you in this environment because you're the only ones who can take advantage of this situation. The second thing is it's really affecting people who are on fixed income. So if you're on fixed income, all of us were, when I was younger, I remember people saying you could retire when you're 55 or 65 with interest rates on your portfolio of 7%, 8% annual returns, or even 10%. That's gone. So a lot of people who expected that to happen don't have that. And when you're on a fixed income and interest rates are like 2, 3%, that really affects your ability to spend money. So it's affecting that part of the middle class. And the third thing that I'd like to share is that it really favors large corporations, this environment, because large corporations can borrow money very cheaply in this environment and do share buybacks. And what happens is that it makes it look like the earnings per share are greater because there's less shares outstanding. So they're taking advantage of this environment to make their earnings look good, and it's driving the stock market the way it has been. So really large corporations can take advantage of this kind of situation. Again, not favoring small businesses or medium-sized businesses as much. So for these reasons, we feel it's the destruction of the middle class in real time, and one of the few ways to protect ourselves is to buy assets ourselves, like earn the income, get an education, earn the income, but then buy good assets or build good assets for yourself. Hopefully that gives you something to think about. Until next time, your life, your terms.